Good afternoon, everyone. Thank you very much for your participation today. My name is Alberto Monteiro. I am the Executive VP of Wealth Management here at Santander. Next to me, I have Camila Stove. She's the Head of Institutional Sales here at Santander Insurance. And together, we are going to moderate this panel about the view of portfolio managers and also the importance of this topic here at the 22nd Santander Annual Conference. It's important to highlight the moment we are currently experiencing. We will be talking with three great managers, and we will see their perspectives and discuss what is currently happening in this scenario. So before anything else, I'd like you to visit our YouTube channel. You're here. And please subscribe to our channel and turn on notifications. Also, there is also a link in the comment section, and make sure you participate in this survey. So I'd like to invite Bruno Garcia, who is our presential guest here today. I would like to invite also André Jakurski. He's the founder of JGP, and he's also the CEO, and also Rogério Xavier. He's the co-founder and coordinator of SPX Capital. I'd like to thank everyone for your presence. We are here to discuss this interesting topic, and I'll start with Bruno. With a simple question, Bruno. Well, in the past years, we are going through more expanded fiscal and monetary policies that is translated in a high level of global liquidity that has influenced an increase in the price of assets, especially in the stock exchange around the world. So, taking that into account, everything that has happened, we can see that inflation is picking up. So I'd like to understand what is your point of view, what makes you more optimistic and what makes you more less optimistic when it comes to assessing this global scenario. So first of all, thank you very much for this opportunity. It's a great pleasure to be here with Rogério and André, two great managers that I admire. It's interesting, this micromanager, we start talking about the macro scenario, but I can say what my opinion is about the main risks, and I'm looking forward to hearing their opinions. So we are kind motivated about this international scenario. I think this post-pandemic scenario is quite good. The world has a lot of liquidity, especially in the U.S. Interest rates there have experienced a drop. And we can see that the Fed is doing the right thing because many of for the benefit of doubt, and we can see that the inflation peak is something that will pass because we can see the economy recovery, and you wouldn't see a problem with the expectations that were set, and we wouldn't lose control of what is happening. So, in my opinion, I'm a bit wary because in Brazil we have experienced before inflation, but we look at developed markets, we can see that inflation represents quite the opposite. Central banks, they couldn't inflate the economy. So with this change of how Fed is operating, proves that they are more tolerant regarding the inflation. Market is buying and giving this benefit of doubt for Fed. So it's important to be in a country with serious institutions. So international scenario, especially the North American one economy, is growing. The market believes that Fed will be able to control inflation. Also, the savings account of the families is at a very high level. We can see employment is again increasing, and its rates is increasing. So they have managed to reduce costs and work in remote areas. So I believe that they are somehow overcoming this crisis. And we look at this stock exchange abroad and in Brazil, we can see the micro sector is very good. The flow is quite strong. So internationally speaking, it's quite good. China has experienced some weakening, but it's picking up again, and we can see the price of commodities started to drop, especially ore or mining ore. and they are very much concerned with the real estate sectors, try to avoid high speculation. So this is something that might damage Brazil somehow, but in China, the main source of concern is the flow of some foreign assets and going to other emerging countries and will benefit Brazil. It's about regulation, especially for IT companies or technology companies. I think the Chinese government is quite strict, completely different from the American one that has a larger type of respect when it comes to these great tech companies. This is a sort of concern, but in the end of the day, it's good for Brazil because part of this flow will go to Brazil instead of going abroad. So in Europe, we can see that it's reopening in an important way, even with the pandemic being that bad with the Delta variant, and inflation in Europe is different because it doesn't grow. But look at Brazil, the situation is more drastic. I'm still a bit pessimistic. We have three issues here. In the short term, we have high inflation, and I think it's kind of disseminated. We started with this commodity problem, and then we had a power problem because of our power management, and then we had the cold weather that put a problem with the prices of foods. So now we can see this inflation, this will be at around 7.5 for the Brazilian standards. Next year, we expect to have something between 4 and 4.5%, so we're a bit above our target. So we don't have room for our central bank to work with these interest rates, so we have to somehow do our thing to solve this problem. Fortunately, we don't have this predictability that Fed offers to Americans, so we have to see how we're going to do with the regulations and these monetary policies. While the fiscal, the tax side is a source of concern, we can see that the GDP debt is a bit better, but inflation that is problem for us improves because the nominal GDP managed that the VIP sustainability to improve. But it wasn't excellent, but it was a relief. But when you look at 2022, it's difficult. We're going to have elections next year. The government wants to, create a new welfare program. There are a series of programs that we spend a lot of money, and of course the budget is limited. So they are trying to sort this out, and I'm very much concerned about this change in the methodology of how we pay. That is something that is very acute, and I have seen some people comparing that with Argentina, when with the former president, instead of increasing interest rates, but inflation was something that was bad, and then he missed the trust of the market for foreign investors. So they were concerned about this government being more popular, and I think it was a bit desperate for them to change these mechanics of court-ordered debt bonds. So I think this is not good for the image of our country. So the least horrible solution, I would say, would be to take these bonds out of our accounts so we can expand the welfare program, but that offers this small coverage, which is difficult to stay within the budget and spend what we can spend. In the long run, we have this problem to grow because of investment, but this is another issue that is not here in the scope of this show, but try to be more positive. The micro scenario is better because we can see companies growing, the economy is recovering, so maybe we can see a short-term relief when it comes to the economic aspect, but I'm still concerned about inflation and how central bank will deal, and also the tax issues next year, and also more structuring issues here in Brazil. Last but not least, I think it's important to mention elections next year. This year of elections maybe was anticipated for this year because of how the government is acting. I am scared that these elections will be polarized. Maybe we won't have a third option. We only have two options, and maybe we might have some political biases involved as well. And this might create a panic in our market because we don't know how we're going to deal that. And of course, it's a source of concern for us, the fact that we won't have a third option here for the Brazilian elections. So I'm positive with the world, very much concerned about Brazil, but I hope that in the short term we will see some positive growth.
Wonderful. Well, Bruno, you mentioned the micro side, and we saw the results of the quarter. We had 30% profit above, but with all the issues you mentioned, 2 to 3 weeks ago, we had a worsening in the fixed income, increasing the discount rate. We saw a reasonable correction at the stock exchange. It was slightly negative, and we now we are trying to see if it is even. André, would you like to add anything concerning the current scenario? And what are your expectations? You didn't mention the risk of blackout. This is imminent, but people are thinking that this is a high risk we will face. So, André, I'd like to hear from you what are the positive and more concerning points.
First of all, thank you very much for Santander's invitation. I think Bruno gave us a perfect analysis for the current scenario. I believe that I'm concerned about the foreign market, not because I think that economy will deteriorate rapidly, but because we had a peak of profits and then we can see stimulus and then a peak of liquidity and the prices are quite high. So the market, which is the crux of the matter here, they have seen a high potential. So if you look at the S&P, you have 5 companies that represent 20% of the index of the market cap, and then 20 companies represent 42% of the market cap. So if you change the perception, then you have a fiscal package that will likely increase the taxes on companies that might affect 5 to 7% of the S&P profit. Won't be that bad, but on the other hand, there are other risks involved related to legal issues that these leaders will be under the attack of the Democrats somehow, at some point, actually. And I believe this high potential for markets is quite limited. That's my perception. I don't think we're going to see a drastic drop because profits are exceptional. So the projection of profits for last January was $175. Now we can see it's above $200. So we can see that this will sustain when it comes to profits. But you should also take into account that there is the China factor. For me, this is quite important because most of these profits coming from these companies that are in the United States, I'm talking about American companies, they depend on the money they make in China, the profit that is there. So, as Bruno mentioned, China has experienced a decrease in their economy, and we can see that effect in some markets, especially the luxury markets. Louis Vuitton has experienced a drop of 5% because the numbers that came from China in the last week was horrible, and it's even worse than the forecast that CSI economists. So I believe this is a risk. And the great discussion here is to see if taper will happen in September, December, if interest rates will increase in December 22 or January 23. For me, this is kind of irrelevant. This is just noise, and this won't change the trajectory of the markets. And talking about the Brazilian situation, I believe that we have a serious problem here. My understanding is that we had a series of unpleasant surprises when it comes to inflation, and they were unpredictable for the central bank and for the markets. As Rogério and I have been saying, they made a mistake with the foreign guidance, and I think this created this old joke that's the shower with hot and cold water. In the beginning, it was too hot, and then they made it cold, and then they turned on the cold water, and then it became hot again, and it was hot and cold, difficult to predict. So I believe the same thing applies to the interest rates. They decrease the interest rates, and then they increase it again, and it's too much. So what is happening is bad for the economy, looking at 2022, because this restrictive monetary policy with the central bank with such a low creditability level, it means that the economy will not grow that well next year. Again, elections next year. So chances are that the government will make an effort to maybe try to please some parties here, and the economy will suffer. So this is a source of concern for me. So companies are doing well, as it was mentioned before, but you have this dichotomy in the market. Most of these companies here in the market, they are doing well. They also negotiating with very high compromise. So I can see that we can see this pluriannual management, and in order for that to happen or prosper, we would need a very booming economy, and I don't see that happening for this year and for the coming year. Therefore, we have to analyze the Brazilian stock exchange market, trying to see what are the companies that have low profit, low, with other companies that have other profits. Then just seeing that this profit going from 490 today, from 450 to 490, you can see this. The consequence won't be good for everyone. This is something that I'm certain. If you look at the companies that are just doing great, high quality, amazing, such as Natura, Magazine Luiza, for example, they are doing so because they are understanding what is happening. So in this environment of 2-3 interest rates is something, but if interest rates are at around 80%, it's completely different. So we expect interest rates to drop, and as a consequence, we can see more credibility in the market. So this is what I want to add to what Bruno has said.
I would ask Rogério if he could add his perspective to these macro aspects, please. You know, it's quite hard because it was a brilliant explanation. I cannot disagree on any point. What I could add as a concern, it is regarding China as well. You know, because they are creating restrictions for technology, educational, and health companies. They are running after some companies and entrepreneurs. They abandon the capitalist perspective and try to bring back the state control. So recently they have announced that they would try to socialize the results, the profits, because they let people got too rich and now they need to share their wealth with all the people. So this kind of statement, let me choose the right word, you know, with this guy that's leading China at this moment, you know, this is very concerning. As for Europe, I have a more positive perspective on regards of COVID when we compare with the rest of the world. I'm here on Europe right now, and it was decided here that we would live with COVID. This is an extraordinary step. So to stop the lockdowns and come back and raise economy again. We are going to get COVID. People will die, but we will not have steps as we did in the last wave when we saw the cases rising, skyrocketing. And now, no, we have a lower number of death cases. So we have chosen to live with COVID, and this is very good for global economy. On the United States, it was mentioned, it's a very good scenario. The U.S. government reaction to the COVID pandemic was something amazing, both in vaccine perspective, tax support, by Fed, adding liquidity to the market, and with this new framework that was adopted, today the American economy is facing an expansion, and it's growing above what expected. We have very good figures on inflation, but also when we look to the long-term expectations, they are above Fed's goals. So basically, we need to reach full employment. We expect to reach this scenario at the end of the next year. So we are ready to come back to a normal monetary policy. When you think about side effects, it's always a challenge when you have a strong economy to have a soft landing, you know. So sometimes we don't have the result we expect. We may have an unhappy landing, so to say, but this is not related to the framework. This is related to the problems that the central banks face when the economic policies meet their objectives. So in my perspective, it makes sense, this normalization that we will have. And you know, we need to wait and see how it's going to move forward. So as for the global scenario, I agree that's a positive scenario. Regarding the emerging markets, mainly regarding Brazil, I agree with the concern that was mentioned here, but let's think in a positive perspective. Brazil is performing well. When we talk about checking account, payment balance, we don't need forehand financing. We don't have payment balance problems. If you think about the tax scenario, we are running the extra ceiling expenditures. We are over it. So let's forget the pandemic. Imagine that we didn't have to buy vaccines and drugs, and also with emergency help to the population. On the relation debt and GDP, we had some benefits on the exchanges. Nominal GDP was higher, but it doesn't matter. Our GDP debt is under 80% at the end of this year. Our expectation at this moment was to be near 100%, so it's very much. We are discussing a starting point as 80% when we had 100% on our perspective. So we have good news. Economic development, our GDP will increase 5%. We are going to recover last year's losses, and this is also very positive. So why are we so pessimistic? What's the problem? The problem is that what we said here, when we look to the future, we can see many difficulties. World is not going to be a good place due to the three reasons André mentioned. We was on the peak of everything that was good. The next year will be worse than 2021, and this makes sense. We will have elections on a scenario with the same tax restrictions that we had on the latest years. And then we have those creative calculations. So here on SPX, I have a partner that's friends from André. We have the Department of Bad Ideas, you know. And a lot of bad ideas are raising and are coming from the government. Ideas that makes the market to lose confidence on the Ministry of Finance and pressuring the risk. I've mentioned on the last Santander conference last year about a big error from the central bank on the monetary policy. You know, it wasn't my warning or André's warning. It was we had several warnings, and central bank, on our assessment, took a risk that wasn't necessary. So we as managers, we need to work with the unpredictable. So when you have a monetary policy on an emergent market, with the tax fragility that we have, to have the actual interest, is there anything worse than this? We know we have no room for improvement. We couldn't make errors. We couldn't afford the unpredictable, and we couldn't afford a raise in the inflation. So when everything went out, we didn't have room for interest. We have La Nina, we had La Nina, we had the power crisis, we had the rise on the oil prices and the other commodities. Now we are facing storms on the south of the country. So we had several unpredictable situations with the interest rate completely outside. Then you gave a forehand guide saying that we had a partial adjustment. So, you know, it's a mistaken error. In my opinion, it's unnecessary on ultra communication on their side that brought some harm to the monetary policy. What I can see now that given the current situation, our current scenario, we have the risk to make mistakes on the other side. So in order to fight an inflation that shouldn't happen the way it happened, we will need to work with nominal and actual interest rates that will stuck our economy. I'm not talking about only the monetary policy. During the next year, the tax policy will not be expansionist. In the case it is because we are facing another problem. It's the electoral policies. Of course, during electoral years, we have some restrictions for populism, but if we overload our expenditure ceiling, it's not going to be the monetary policy that will control expectations. And I don't know if central bank will be able to have an active monetary policy and bring inflation to the goal that we have. So that's my concern. An environment that could be today with positive results in my evaluation. We have a market that doesn't trust government and the central bank when we talk about the tax policy, the monetary policy, and the institutional policy of the country for the next year. So this situation is raising all this noise in the communication. And if we didn't have this politics confusion, we could be on a much better situation. And, we are going to lose this good moment.
Very, very clear. Well, you said that you didn't have much to add, but you did have. Now, very objectively, in the exchange rate issue, everything that you mentioned was reflected on the currency. We couldn't not imagine a real below 5. Now, the monetary policy being adjusted provides some comfort, or at least doesn't let the currency to go to the levels of last year. But starting with you, Rogério, this real scenario, and then Jakurski, if you want to talk about other currencies, and also tapering and global monetary policy. So let's talk about currency, because I think it is a very diverse market.
Talking specifically about real, we could say that with the monetary policy, with adjusted monetary policy, and also having a payment balance for checking account, in the situation that we are facing, it wouldn't be necessary to devalue our currency. We would be in an acceptable level. On SPX, we work with the level exchange between 130 and 140, what we are facing today. But that's the truth. This currency exchange, it's actually for a scenario where we have a normal scenario as a political and economic scenarios. And what the market's saying through the pricing is that we are not going to face a normal political and economic scenario next year. If that's true, if you're not going to face a political and economic scenario next year, I understand that the variable that is going to move on is the exchange rate. If we get to a scenario where people are concerned about political stability, if they're concerned about democracy in our country and tax sustainability, the first thing they are going to look for is to protect themselves on real assets. Usually people look for stronger currencies due to, historic issues. So it would be dollar, the American dollar. So people think on the investment from abroad to Brazil, but they never think about Brazilian people sending money abroad, as we see in other countries. We can see this in Argentina, for example. All the saving accounts in Argentina were outside the country. This is a reasonable risk. And the more we think exchange is the real variable, if the actual exchange is the main variable, so what market's saying when we check the implicit inflation above 7%, interest is raising, but implicit interest is also raising. So regardless of central bank raising the inflation will get more and more high. So we are discussing tax dominance. The market is starting to add this to the prices. Even central bank raising the interest, the inflation will raise as well. So the exchange rate will grow as well. And I always say that when we get into this scenario, and I'm not comparing with what I'm going to mention. It's just to put things into perspectives. 6 years ago, Argentina exchange rate was 10. Today it's almost 100. 6 years ago, it's not too long to make 10 times. So if we get into a situation raising inflation, exchange rate will grow a lot because it's a variable that needs to follow its real value. If inflation raises, exchange rate will raise the same to compensate. I'm not saying this is our base scenario. What I'm saying is that the way I read market pricing today, even in this beginning of its trajectory, tells me that if I need to choose a side, I will buy dollar, because in that scenario, Cambio moved forward. So basically, that's it.
André, I would like to hear your vision, if you agree with Rogério, and what is the currency you are considering? Where do you see more opportunities at this moment?
I believe that what Rogério said is relevant, and when you calculate and you see the correct exchange rate for Brazil is 4.50, 4.70, it doesn't take into account the forecast or take into account the problems that Rogério mentioned. So if you correlate that with these exchange rates and the Brazilian currency, we can see that it's much lower, but there are other effects that will influence. And the currency is never in balance, so there is never a correct amount. It's always oscillating up and down. And there are many ways to measure that. Purchase parity, for instance, really affected exchange rate, and you apply, but you don't believe when you trade that, right? So, under normal conditions, pressure and temperature with external markets that is the same as it is today, I would say that real the next months will be between 5 and 5.50. If we had good news, it's going to be close to 5. If we have bad news, it's going to be at around 5.50 or maybe more. So high interest rates is going to be an anchor, and I think that it won't go that high. So this is the current moment, but as we get closer to the election year, everything is possible. Any result will be possible because we have these different biases. So it's not easy as it was last year that we would buy $1 for 1 year with 2% higher than the spot. Now we can see it's a bit more costly, a bit more. If you want to bet in dollar, you have to pay an extra money to see if they will have some good results or not. So somehow this stimulates a spontaneous increase of the dollar if we don't see any negative events happening. So I would say that what is not in the correct in the calculation now is a water crisis that the government's not giving a lot of publicity, but it is something serious. So we have to pray to rain, because if it doesn't rain during the rainy season that goes from November to March, we will see some bad consequences. So for me, this is a huge risk for the economy, for the exchange rate as well. So when we had the water crisis back in 2001, it was a problem because we didn't have different water energy sources, such as wind and solar energies. But today is a bit different. But I think this is the range for exchange rate. I don't see it going below 5. We would need to see something completely unexpected, extremely positive news, and to be below 7. So the risks are here. And something that is good about Brazil when we compare with other countries and that somehow will soften some problems that we have is the likelihood for Brazilians to get vaccinated. We can see that 96% of Brazilians are willing to vaccinate, which is completely different in the US. So COVID here in Brazil, if we vaccinate the population, we will control it quite well. So this is an important factor that might help, with the exchange rate. If we see another COVID wave here in Brazil, that we would have to, opt for lockdowns, and you give the license to kill, I think then we will see something wrong. And if we have high interest rates and this corona voucher being given to people, then situation is going to be worse. But I'm quite moderate. I still need to see what's going to happen in the coming months, taking into account this 10% average of oscillation. And you can see that exchange rate in Brazil, it oscillates to 2.5% without any prediction. So, or there isn't any other currency in the world that oscillates that much. For all the currencies, I would say that dollar is strong. Everyone forecast the dollar to drop, and it might devaluate because you have a huge fiscal deficit in the U.S., especially with the current accounts deficit and commercial one. So these two type of deficits, if there is a 1-2 year lag, ultimately leads the currency to devaluate. But what have been seen in the U.S., that the economy is doing well, much better than the other ones, and people are sending money to the U.S. So for me, I don't see dollar devaluating. There are other currencies that performed quite well this year, but maybe the base is different. Maybe the currency of South Africa, because it's compared to Brazil, they are worse. So I would say that this still hasn't happened yet. The currency performed well. These things cannot be explained. The currency market is the only market that even after things happen, you don't know how to explain how things happened, right? So, and things happen. Euro was at 82, 165, and nothing dramatic happened if you compare Europe against the US. And the financial movements influence currencies much more than the commercial ones as it was in the past. So this would be the summary of my understanding. Of course, maybe you can think of other currencies. For example, the one from Korea that goes up and down. So you have to pay attention to that. But this year was a horrible year to work with currencies. Every year I make some money with currencies, but this year market was very erratic and with some difficult and strange movements. So everyone that works with currency had a very complicated year. Perfect. So just changing from currency to stock exchange, I'd like to propose a provocation here to try to explain, understand the following. With taking into account this scenario related to Fed stimulus, and it's a trend, and when this will happen, how does this scenario correlate? In thesis, it will be a sell-off of risk assets. How does that interact with the Brazilian market, with our stocks and IPOs? For example, a manager of actions, how do they translate this macro to our micro reality? So in the end of the day, this managed could buy a quota from a fund. Well, it is a relevant discussion. interest rates will increase, and this is a fact. The doubt is that they will grow in a healthy way, so the economy recovering well, and the inflation quite well managed, and people still believing that Fed will do its work well and won't be behind the curve. So we're talking about a positive environment, economy recovery and inflation being controlled, the Fed increasing interest rates slowly but surely would be the best one. But it's not healthy for economy to work with negative interest rates for a long period of time. If you look at 10-year curve, it's negative. So you can see there is something wrong with the economy. A healthy economy wouldn't experience such negative interest rates. So when we see markets not performing well, in the future, the central banks will have room to work with the interest rates, but nowadays they cannot decrease interest rates. They have to use other instruments to offset that issue. So I think it's positive that the Fed is increasing interest rates in an organized manner without having to tamper with inflation. Of course, a consequence is that maybe these investments might have some influence. So it seems that the profits are high because interest rates are low, and one thing offsets the other. So when we look at this long-term perspective, our impression is that what really is important for companies is about profit. So if the economy is growing sustainably and profits are following that, even if you get the price wrong, someone mentioned that profits are not saying that these profits contract, and in the future you see if you invest in a company that work well. So if you look at the Brazilian situation, it's been 10 years that the Brazilian Stock Exchange, we haven't made great progress. And in the meantime, we have seen a lot of businesses and companies doing really well. So, with also local managers had the possibility to deliver great results. We have maybe 10, 20 managers that could offer 10 to 20% profit, for example. So, for this perspective of 1 year of the stock exchange, I think if we invest it well, it's for the long term. So, I feel comfortable to go through this crazy moment of the short term. And if you choose great companies that will offer great results in the short term, then we see some positive. Brazil is a huge country with a lot of opportunities. When you compare against all the emerging countries, we can see Russia and China and their governments, the way they change rules. South Africa has something fiscal issues. Mexico is also complicated. So we tend to criticize a lot ourselves when we look at our reality, but we are an emerging market with a lot of problems. But the business environment is very good for opportunities, and we can see great results for the future. The only concern that we have here that we might see some sort of exaggeration when you look at the short-term scenario. I was even talking to a friend of mine who's a banker. He has more than 40 companies. And because of this, the fact that next year will be a complicated year, taper year, elections, everyone try to access markets this year. It's impossible. We won't have 40 IPOs. There is no funding. There is no room for the funds balance. There is no ability for managers to keep track of these companies. Some of these companies not ready to go for the open to the stock exchange. So it's some sort of, we're kind of pessimistic. And a recent movement said that IPOs dropping quite a lot. You know, individuals have experienced some issues, managers that do not have expertise and they bought bad shares and they somehow zero because you can see a macro environment that is concerned, but on the other hand there is not a lot of liquidity. So when you compare that against the GDP, it's different. So there are a lot of issues. So our stock exchange becomes quite small for this liquidity.
It was clear this week the company has a smaller liquidity.
Yes, and we will face the scenario until the end of the year.
It was a record year, 120 million. We had 120 billion almost last year. We have some euphoria. We see consolidation in the market, but we have to dose.
We need to be more selective in pricing. We cannot accept anything with any price. Of course, there are wonderful stories that demand prices, but we need to be very objective. And I will be very cautious if I'm an individual on choosing what to buy. There are a lot of things out of the price and that we are not prepared to buy.
Wonderful. I think we had lots of subjects to tackle, and I'm not restricting the time. It's very rich to have this debate with you. There's a subject that everybody could debate as a part of commodities. We just touched it en passant, and we came in a foreign see ores dropping, perhaps the supply is being controlled, the increase in the demand. It's a greater fear. I want to hear your opinion in regards to commodities. André, if you could start, please.
I think we need to split agricultural commodities from metallic commodities, because what rules the commodities in the world is China. So if China has demands, it will raise. Otherwise, we are going to be stuck or we're having a drop. This is rule number one. So what did happen? We had a high demand for agricultural commodities and oil as well. They bought oil last year because it was cheaper. And they also stocked some other minerals, aluminum cores. So as we have low stocks, we can make sure that commodities price will not drop. As for the metallic commodities, we depend on China demands. Even that on long term, we may have a deficit on copper, mainly because of electrical cars and clean energy. In a short term, copper dropped 20%. They $4.50, and the iron ore reached 140. So commodity oscillations we cannot compare with the other markets. They are very hard, both up and down. So it's very hard to have a prognostic for agricultural commodities because they have short cycles, you know. And for non-agricultural commodities, the non-soft commodities, we may have some prediction. One of the commodities that we have a good prediction is about copper, and there are other commodities that we use for clean energies and lithium. We have a perspective, a very good perspective for 3 and 5 years. And this market, we may have some prediction, but we have short-term oscillations that are unpredictable. So soft commodities, for soft commodities, the market took too long to understand that China was speeding down. So the market showed a very high oscillation in a 1 month interval. So the soft commodities are clearer than for metal commodities, metallic commodities.
Wonderful. Rogério, would you like to add something?
You know, I agree with André's perspective regarding metallic commodities. We don't think we're going to see the growth level from last year and the beginning of this year. It was a very accelerated growth that raised the commodities price. They are using some instruments in order to control the production, and they are using some kind of barriers, So we think that in this market depends completely on China, and it's really hard and complex to operate it. As for the agricultural commodities, by the effective demand or because of the weather, and as the passage stocks are very low, we can still see a very positive scenario, even because the weather perspective for South America, mainly for grains, it keeps very bad for the second half of the year. So we will keep having low stocks for some time with a good price. We also are seeing problems with cattle, but we have a good moment. As for oil, it's too hard to operate the exchange, but we also have an optimistic perspective because markets concern on iron getting into the market, we think that's quite hard to happen. We can see the current political situation in the world being very complicated to reach an agreement between Iran and the United States. Biden seems to be very weak on their foreign hand policies. The governments are testing him all the time, and we think that this can create some kind of tension on the oil market. As for gold, palladium doesn't have this influence of this basket of precious stones, as we don't have a commodity, expressive commodity to face the demand. So this 10-year cycle, this 10 years of high cycle, we are going to keep it. But we need to keep paying attention on the monetary policy on the United States, the relation between gold and the currency is 1-for-1, and if we leave the actual interest that the United States government is working with going to zero or a positive, we may see gemstones market having a very important readjustment. If you believe that the right direction, this could be a good short for your portfolio.
Interesting. Unfortunately, we have reached the final moments. Again, I would like to thank the presence of Rogério Xavier, André Jakurski, JGP from Truxt Investments. Thank you all who were here present and took part. Please join the notifications in for you to fill in the survey. We have the final panel. We have Alex Shapiro, Director of the SoftBank in Latin America, to talk about tendency for investments.